And welcome back to Forex Scope. I'm thrilled you're joining me today as we dive deep into the exciting world of EURJPY. We'll be dissecting this pair using the quick insights of the 15-minute and lightning-fast 1-minute charts to uncover potential trading opportunities. If you're ready to stay ahead of the curve and enhance your Forex game, make sure you hit that subscribe button and the notification bell so you don't miss out on any of our future analyses. Let's get right into it and see where EURJPY is headed. This support zone is identified between the price levels of 176.665 and 176.521. Looking at the candlestick data, we observe a consolidation or accumulation phase within this range, particularly evident around the timestamps 176.225, 4000 and 176.225, 4900. During the interval from 176.225, 4000, 11 hours, to 176.225, 4900, 11 hours and 15 minutes, the price action shows several candles with a significant number of touches. The highest price observed in this period was 176.684, and the lowest was 176.520. The presence of multiple candles interacting with these price levels suggests that this area acted as a floor, where buying pressure emerged to prevent further price declines. This pattern indicates a potential area of demand where the price has previously found difficulty breaking lower, signifying a strong historical buying interest that could be revisited. The congestion and back-and-forth movement within this range points to a battle between buyers and sellers, with buyers ultimately holding their ground at these specific price points. This makes it a compelling support zone for potential future price reactions. This resistance zone is identified between the price levels of 177.047 and 177.116. Within the given data, we can observe a notable area of price congestion and reaction around the timestamps 176.235, 7500 and 176.235, 8400. Specifically, during the period from 176.235, 7500, 15 hours and 45 minutes, to 176.235, 8400, 16 hours, the price exhibits characteristics of a resistance. The highest price reached in this timeframe was 177.125, and the lowest price was 176.990. The candlesticks in this interval show a struggle for the price to move higher, indicating that selling pressure is strong at these levels. The presence of multiple attempts to break above this zone, met with considerable selling, suggests that this price range has previously acted as a ceiling. This area likely represents a zone where sellers have historically stepped in, pushing the price back down. The repeated rejections at these higher price points highlight a significant supply zone, making it a critical level to watch for potential downward price movements. The bearishness observed suggests that sellers are more aggressive in this price band, creating a barrier for further upward momentum. The support zone is identified by a significant drop in price between 1417 and 1418, with the price reaching a low of 176.958. Following this decline, the price attempted to recover, forming a consolidation area between 1418 and 1419, where it bounced back from the lower bound of this zone. The subsequent candle at 1419 shows price action attempting to push higher, but it encounters resistance. The period between 1418 and 1420 shows a clear area where the price struggled to break lower, indicating a level where buying interest stepped in. This zone, roughly between 176.958 and 176.983, represents a historical area of demand where buyers previously stepped in to prevent further price depreciation. The multiple touches and the prior strong rejection from these lows validate its significance as a support. It is also evident that this support is far from the identified resistance, adhering to the requested minimum separation. The resistance zone is identified by a sharp increase in price between 1559 and 1600 hours, where the price reached a high of 177.125. Prior to this strong upward move, the price had been consolidating in a tight range, indicating accumulation before the breakout. The candle at 1559 shows price struggling to move significantly higher despite testing the upper bounds, and the subsequent candle at 1600 hours experienced a sharp reversal downwards. This suggests that sellers were actively defending this price level. The area between 177.090 and 177.116 has acted as a ceiling, where the price encountered significant selling pressure, causing it to pull back. The clear price action of a strong upward push followed by a rapid decline from this zone highlights its importance as a resistance. The substantial gap between this resistance and the identified support ensures the required separation. The EURJPY currency pair is currently trading around 177.043, exhibiting a slight upward momentum after touching the upper boundary of the Bollinger Bands. The recent price action shows a series of minor fluctuations, indicating a period of consolidation within a broader upward trend. The Fibonacci retracement levels suggest a potential continuation of this upward movement, with the current price sitting above the 38.2% retracement level. The presence of buying pressure is further supported by the bullish engulfing pattern observed on the 1-minute chart, signaling a potential short-term rally. We anticipate the price to test the resistance zone identified at 177.095 to 177.116. If this resistance is broken, we could see further upward expansion towards higher price targets. However, a failure to break through this resistance could lead to a retracement back towards the support level at 176.975 to 176.958. The current tick volume shows moderate activity, suggesting that the market is actively participating in price discovery. The overall trend appears to be cautiously bullish, with key levels to watch being the aforementioned support and resistance zones. Traders should monitor the price action closely around these levels for potential trading opportunities. The confluence of technical indicators, including the Bollinger Bands and Fibonacci levels, along with observed price patterns, provides a robust basis for this forecast.